Markets have opened extremely weird this morning. We'll get to that later, but the Nasdaq is way up and the Dow is way down. I mean, we're not talking a little bit, a lot. Anyway, but the first story this morning is from Reuters. Robotics startup Figure said it has signed a partnership with BMW Manufacturing to deploy its humanoid robots in the car maker's facility in the US as more companies turn to human-like robots to take on certain physical tasks. This marks the first commercial deal Figure has signed since it was founded in 2022, 2 whole years ago. While the company didn't disclose how many robots BMW will be using, the partnership will start with small quantities and expand if performance targets have been met, according to Brett Adcock, chief executive at Figure. Figure's humanoids will be deployed in BMW's opens new tab manufacturing facility in Spartanburg, South Carolina, the largest automotive exporter in the U.S., which currently employs 11,000 people. They will be integrated in the manufacturing process, including the body shop, sheet metal, and warehouse in the next 12 to 24 months after being trained to perform specific tasks. Well, there you go, folks. So, and some folks think that Tesla shouldn't already be talking to third-party supply customers, potential customers. Okay, I'm all for Pepsi in and out, being the first two. You know this about me. So this is Randy Kirk. Please hit like, please hit subscribe, and please hit notify if you'd like to be notified about Brian White coming up later, where he's going to be talking about some of his estimates for 2024. And you know, his reporting is real reporting. And so he's going to be giving you numbers I think that you'll appreciate and can anticipate having some validity. And then we've got Bradford Ferguson as our Thursday night co-host on Good News Thursday. Of course, if you haven't bought your Cybertruck bottle opener yet, you know to do that, and you need to join Patreon and help support the channel. The information on all of that is down below in the description. All right. Model 3 Performance might be announced later this month for shipment in March. This is too much of a rumor for me to go into a lot of details. There's a lot of discussion this morning about whether this will continue to be a ludicrous mode two-motor vehicle or whether it'll actually be offered in a plaid. There's conversation about the seats, a lot of conversation. I decided not to go into detail on it yet because I'd like to get a little more solid information before really taking a deep dive. From Teslarati, however, this is you can count on. The original Tesla Model 3 is a very safe vehicle, so much so that in 2018, it became the car with the lowest probability of injury among all vehicles that have been tested by NISTA. Now, based on the results of a Chinese version of that government agency, it's called IVISTA, Intelligent Vehicle Integration Test, it appears that the upgraded Model 3 is continuing its predecessor's tradition of safety. Duh. Now, there are some reports out this morning that Teslas and electric vehicles in general are more likely to be involved in, more likely to, be in an accident during the first year of driving. I think this is another nonsense deal, which is why I'm not going to say any more about it than that. All right. Also from Teslarati. Now, this is clever. See, this is marketing. This is guerrilla marketing. I really like this. And Tesla's destination chargers offer a unique draw to businesses like hotels, restaurant, parking garages, and more, letting electric vehicle owners charge while they stay, eat, or otherwise. Yeah, this is an obvious thing. People, these organizations should be putting up destination chargers. Makes total sense. But now Tesla is also letting owners of destination charger sites host their own self-serve drive demos using the brand's vehicles, as seen in an email from the automaker this week. The self-serve demo program invite was sent in an email Sawyer Merritt happened to see. He posted it on X on Wednesday. The email notes that the destination charger host can get up to 4 demo drive vehicles, generating additional revenues while Tesla manages and maintains appointments for property owners at no cost. The email says that current sites hosting demos will host an average of 35 or more demo drives per week. Can you imagine? And this is really a fun deal. Get more out of your investment in Tesla. This is the quote from the letter. Get more out of your investment in Tesla destination charging by hosting self-serve demo drives at your property. They suggest it would attract new visitors, increase awareness about electric vehicle charging at your properties so that people know you can do that, and create future customers out of new electric vehicle owners. I think they should cap it off by letting the destination get some kind of points or bonuses based on anybody that buys a vehicle after testing it at the locations. Wouldn't you think that would make sense? Maybe that's already in there. It just wasn't reported. All right. Let's turn to general financial. Well, this is Hyundai Motors. This is something that does not surprise me at all. From the Wall Street Journal, Hyundai and affiliate Kia jointly captured the #2 slot last year in total U.S. EV sales, trailing only Tesla, which obviously Tesla, he's commanding over 50% of the category lead. Analysts said that the allied car makers, the two guys, Hyundai and Kia, which are jointly owned, I'm not exactly sure how that works, but they create a conglomerate, as said by this note. They're poised to cement or advance their lead over the rest of the non-Tesla rivals because they've got new products coming on this year. Behind their growth, which last year outpaced both Tesla and the broader EV market, they have an aggressive bet on the EV technology. So I've been saying for a long, long time, I think that the South Koreans will end up probably in the #3 or 4 spot among EV companies worldwide because of their being so aggressive in the space. All right, now let's go over to general economic news. We got Reuters this morning. Weekly jobless claims fall 18,000, continuing to 202,000, which I think I might have something. Anyway, 202,000. Continuing claims dropped 31,000 to 1.855 million. Private payrolls increasing by 164,000 in December. We already knew that. All right. This is, I forgot to write down who this was. I think it was also Reuters. Manufacturing rose 0.1% in December after a 0.2% gain in the prior month. This is a little surprising, the small numbers, but still, it's good to see something going right with manufacturing right now. Motor vehicles and parts output rose 1.6% after a 7.4% jump in the prior month, as the auto workers came back, of course. Excluding autos, total industrial output was flat. Manufacturing output was down if you take autos out of it. Utilities output fell 1% in December due to warmer weather. Mining output, including oil and natural gas, rose 0.9% after a 1% drop the prior month. According to them, the big picture is business investment fell sharply in the fourth quarter. Production declined at a 3.1% annual rate in the final 3 months of the year, while manufacturing was down at a 2.2% rate. This will weigh on fourth quarter domestic product. It remains to be seen if the recent easing in the financial conditions would boost manufacturing. No, we're seeing it's not. Early readings from the New York Fed show manufacturing conditions worsening this month. We'll see that the Philadelphia Fed's showing the same. Housing, and then we have new additional information. Housing starts fell, surprisingly, to 1.46 million annual pace from the 1.53 million in November, according to the government. That's how many houses would be built over the entire year if there's a continuation of that 1 month, of course. The data exceeded expectations on Wall Street, where the expected rate was 1.43 million. The numbers are seasonally adjusted. Single-family construction was down in December, multifamily ticking up. I don't think this trend will continue based on other information like this from Market Watch. Housing starts fell to 1.46 annual pace, as we just said. Whoops, I'm very sorry. That is repeated. Randy has written it down, put it down twice. But builders are excited and permits are up. So Even though December numbers show a sharp drop in housing units being constructed, a more recent survey of builders in January, they're upbeat about future sales of new homes as mortgage rates fall. That gauge rose about 7 points. They were also optimistic for the first time since August. That gauge about future sales, that gauge rose 12 points. Builders were seeing an increase in traffic among prospective buyers. That gauge rose by 5 points. I continue to believe that housing could be the savior of the GDP next year. On this note, however, we got the opposite. Again, the U.S. business inventories fell for a second straight month in November, and declines in retail wholesale stocks, where you can see inventory investment subtracting from economic growth in the fourth quarter. Inventories declining. We've noticed nobody else is really paying attention to this. Inventories in general, both wholesale and retail, remain very high. And so that's a continuation of the unwind of the boom bust that we've been through. And so these inventories need to come down. And yes, it'll have an impact on GDP, but the reality is that this is not indicative that there's something wrong in the economy. This is something that's indicative of the continuation of the unwind. This morning, the Philadelphia Fed said this morning that business activity fell to a negative 10.5 in December from a negative 5.9 the prior month. Any reading below zero indicates deteriorating conditions. So this is the Philadelphia Fed joining the New York Fed, saying that they're seeing negative growth, especially in manufacturing. This is where the problem really seems to be. Well, with all of that in mind, where are the markets this morning? Again, I said that they were very, very strange when I looked at a little bit ago. We have Tesla in slightly positive territory, up 8 whole cents. Tesla had been up in the pre-market, then down strongly for a minute, but now the trend is definitely up. Well, that, as I say that, let's call Tesla break even right now, down a penny. Now we've got the Dow up 120. I'm sorry, down. Boy, let me look at this again. It is red. The Dow is down 116, but the Nasdaq's up 121. How often do you see that kind of, I mean, sometimes the Dow is down and the Nasdaq is up, but by this much? Holy mackerel. The S&P is up 12. Tesla is now up 63 cents. And all of the Magnificent Seven are up. Let's turn into percentages here. We've got the Dow down 0.31, Nasdaq up 0.84, the S&P up 0.26, and Tesla is up now 0.29, and the Cathie Wood type stocks are they're mixed, but tending to be down, with strength in PayPal and Square, which was expected after the PayPal speech yesterday got such rousing reviews. So PayPal might have some, in particular, might have some good strength here in the market for a few days. Just based on the speech, I'm sorry. In general, I'm not sure. I have covered PayPal in the past. I haven't been really paying that much attention to it recently. All right, let's go ahead and see why, if anything, we can see if there's something that is causing the stocks to act the way they are. Let's start with the 10-year bonds. The 10-year bonds are at 4.121. If you watched my program last night, you know, and you can, go take a look at that program still if you want. It was very, very good. We had Jeff Lutz, as usual, on there, and he's concerned that the 10-year is now over 4.1. He thought that was a point that needed to be watched. It would be bearish if it kept on going beyond that. We are now sitting at 4.121 in the intraday, up almost 2 basis points. And the 7-year and 5-year are also up, and then it's mixed beyond that. Really nothing to say beyond the fact that the 10-year is up. The yields are up strongly this morning. Then let's take a look at oil. We've got oil this morning up barely, just 37 cents, still in that exact same trading range. Let's call it $73. And Brent is now only a $5 gap. Normal gap on Brent versus Texas crude is $3. It has been $6 because of the Red Sea. Right now it's sitting at only $5. That is narrowing that gap a little bit. Maybe I don't think the Red Sea is any less of an issue, except it is now the second half of January. We're getting past winter here. Yes, I know. There's still a month and a half, maybe 2 months of winter weather, but we're seeing the end of winter in terms of there hasn't been a lot of cold to eat up oil and natural gas stocks. Natural gas down this morning, 2.37, kind of a normal drop, although 2% in any given market is always a big drop. Okay, then we've got gold sitting at 2014. That is kind of in the low end of the recent range. Copper dropping this morning, 0.38. That's a pretty significant drop this morning for copper. The dollar continues steady at kind of the 1 month high. Bitcoin this morning is just, call it even, down $39. It is at 42.6. That's kind of where it's been. So not a lot of activity there. All right, so let's go back once again, take a look at, has Tesla moved much since we last looked? It continues to be up 32 cents, but everything seems to be flattish, kind of not going anywhere since the start this morning. The Dow is moving a little bit positive, but it's pretty flat over the first 20 minutes of the market this morning. Okay, so once again, let me encourage you to go back and take a look at yesterday. We had, what did we have yesterday? Yeah, you know, time flies when you're having a good time, and it's hard for me to always remember exactly what's going on. We had a very, very, very good video yesterday at the noon hour. It was with a very good person. And I'm going to put the card up right here. I'm really sorry. But I do know what's coming up today. We got Brian White coming up today at the noon hour. And then we have got, of course, Bradford Ferguson coming up tonight. So you want to hit notify, but in order to hit notify, you have to have a subscription. So hit subscribe and make sure you are subscribed if you choose to be subscribed, because sometimes for some reason they take away your subscriptions. I don't know what's going on with that. And then hit like. It just takes a second. Please hit the like button. And then, of course, I'd love to have you buy some Cybertrucks. You know, I only want you to buy them if you want them, but the reorders are what's really impressed me. People that have bought 3, 4, 5 are coming back and buying more. Because why? Because when they hand them out, when they give them away to friends, family, office workers, whatever, people go, wow, that's so cool. So wouldn't you like to be part of that? And then, of course, joining Patreon is always a wonderful thing that you can do to help support the channel. Yes, I get revenues from advertising. In January and February, those revenues dropped dramatically from, say, around $9 a thousand to something like $7 a thousand. So it's like a over 20% drop is what we're looking at right now. Even with the same numbers, the dollars are down 20%. So joining Patreon would be a real help this time of year. Hey, join for 3 or 4 months and then, trail off later in the year when the ad revenues get more positive. All right. I think just for fun. I mean, why not? Why shouldn't we look one more time? 44 cents up on Tesla right now, nicely in the green and looking like it's trending slightly up at this exact moment. We'll see what happens later in the day. Join me tonight when Bradford Ferguson and I will go over the good news that took place today. It's been great talking to you.